Let's dig into the huge capex forecasts from this week as well as tonight. Joining us on the phone, Gene Munster, Deepwater Asset Managing Partner. Gene, great to have you with us. I want to pick up where Kate left off with that statement from Andy Jassy about capex and how that capex will be deployed. Is there some fear that the $200 billion, it's not a pure let's seize the moment in AI. It's let's also spend on robotics and, orbital satellites and all sorts of other things.
Well, Google last night talked about half of their capex going specifically to Azure and a lot of it going to compute for other training that they're doing. But I think in general, you should look at about 80% of this capex is going to be somehow AI related, whether it's robotics. And of course, they have their regular way of business when it comes to capex and doing some things on the outer edge, I guess literally in space. But to answer your question, it's probably 80%, still a really big number. And speaks to, I think, what is the conviction that these companies have in terms of where AI is going.
And Gene, if that's the case, let's say they're right. It actually helps you understand, perhaps, why the market has been so hostile to software. Because if we're going to be spending, $600 billion in 5 companies or whatever it's going to be this year on capex because they see so much demand, that has to displace some massive revenue and profit pools somewhere in the world. I mean, and they're assuming it's going to be a lot of software.
Yeah, I think it's a good assumption, and I want to go back to the software is being impacted by this. I want to go back to the concept of what kind of weight should investors put into these huge capex numbers, and specifically is that they are coming from a select few number of companies. And there's a central question. This all plays into the software question, too, a basic question to ask, which is, are the companies that are amping up these investments, are they competent? Do they have a good view of where the world is going? And if you ultimately say they don't, then the reaction is perfectly fine that these stocks, Google last night, Amazon tonight, trading off on these big capex numbers. But if you think that they have a unique view, which I believe they do, and do have competence in terms of how to get an ROI on AI, we've seen big ROI from Amazon, from Google and Meta more recently on it. But if you believe that they are, in fact, competent, the only takeaway you can have here is that we're still at the very beginning of the transformation around AI. That the amount of capex, it's not going to end in 2026. It's going to continue. The growth rates might slow a little bit, but it will continue to be huge numbers in 27, and we're still early. And why that should resonate not only for the infrastructure people, but also across in the software, is it speaks to the level of disruption that ultimately will come. And I think that's the central point, that I'm not getting the joke, because I still think this is really good with the capex numbers. The brain of AI is getting bigger. I think that's going to yield more AI utility and more AI disruption. It's not going to end with software. It's going to it will play over to everything and unemployment, and there's just so many rifts to it. But I still believe that this is a sign. The simple takeaway from Google and Amazon, their capex numbers, is we're still early.